Hey, so yeah, okay, great. Good morning, everyone, and welcome to the next installment of these monthly breakfast meetings. For those that haven't been before, every month I'll just be presenting on a different financial topic. So today is obviously all on cryptocurrency and how to invest in it and what it is. So I've got a rough agenda today to talk about a bit about the blockchain. Not in any great detail, I'll do kind of high level, and just kind of looking predominantly at the main cryptocurrencies there are, what their functionality is, and just exploring the different platforms you can then start using if you did want to start investing into it. So roughly got an hour. Want to make this as a two-way dialogue, so I'll answer as many questions as you want to. And if I could just perhaps now just go around the room, and it would be great just to get a quick understanding in terms of what brought you here today. And if you have any pertinent questions you want answering, obviously in regards to cryptocurrency, and I could just try and form the hour session around that. So I'll start with the first person on my screen, which is Jack. So over to you, mate.
Well, yeah, I'm just curious, I suppose, around the whole thing, in as much as it feels like it's potentially like the next big thing. And it's more, I don't know a huge amount about it. I kind of semi-understand the blockchain thing and it being decentralized, but I don't think I could explain it to anybody, so I don't understand it well enough. So I would like to know more about the workings behind it, and then probably the different functions of the coins. Because again, I understand a little bit about it, how some of them have different applications, but don't really appreciate what that means in the real world.
Certainly. Brilliant. I'll cover off all that off today. Yeah, I mean, there are hundreds, if not thousands, of coins out there, all with different functionalities, and I only know a very small portion of what they do. I think a good thing to do today maybe would just be go through the top 10.
Yeah, perfect.
And almost that's a great starting point if you did want to invest. Is almost just kind of pick the top 3 or 4 and hold them for a few years. And then once you kind of become a bit more familiar with it, then you can start playing around with it, buying, selling, buying new ones that come out. But as a starting point, that's certainly what I'd recommend doing. So the likes of, Bitcoin, Ethereum, Binance, Cardano, some of those may be familiar to you, or you may have heard of them.
So I've got a little bit already. I've got a little bit of money in the game, if you like. But that's just out of like curiosity, I suppose. I used to play a fair bit of poker, and crypto's been something that's been talked around in the poker world for ages and ages and ages, because a lot of those American guys are really progressive with this kind of stuff. So it's something I've been really aware of. Which feels like quite a long time, like I don't know, 5 or 6 years. So just as a real speculative thing, I put a little bit of money in a while ago, just on the off chance that something else would do what Bitcoin's done. But it's small money, and it's just, if something does go from 50p to 50 grand again, then it would have paid off. If it doesn't, everything is safe. But it would be good to understand the bigger ones, because I think that's probably where I'm looking. I'm not trying to do anything too left field.
What do you have money in at the moment then?
Bitcoin, Litecoin, and Ethereum.
Yeah. Okay. So the main 3.
Yeah, basically because that's what I could get on Coinbase at the time, and they're the ones I'd heard of.
Yeah. That's generally what happens. Those that are listed on Coinbase, you'll see a quick spike in the price.
Yeah. Okay.
And so you kind of see a lot of stuff in the news. People going, oh, right, well, Cardano or Polkadot is going to go on Coinbase, and everyone quickly rushes in and buys that particular coin for no other reason. It's just going to get listed on Coinbase. That's always something to kind of listen out on.
Keep an eye on. Okay.
Yeah. Okay, great. And how have they done so far? You've
so
got a return?
like 400% up from where I got it. Bitcoin is about the same, I think, actually, and Litecoin is down. But not massively. Well, I think it's down about 50%. I think overall I'm more or less where I started in terms of my portfolio value.
Well, right.
But I think that's just, more luck than anything else.
Yeah. And I think with stuff like this, if you did want to have a dabble, I always kind of say to people, take 5% of your liquid cash or assets that you have and invest in that, because at the end of the day, are you going to miss 5%? Or if you do, don't do it.
Yeah.
But always invest what you can afford to lose with stuff like this, because it is extreme volatile. And as you say, the analogy of gambling, some people say it is gambling at the moment anyway. But if you get it right, you just said 400% returns on Ethereum and Bitcoin. Have a dabble in it. Yeah. Cool. Okay, thanks, Jack. Connor.
Yeah, so a lot of it was similar to what Jack said, just trying to find out a bit more about it, and also what drives like the massive volatility you see every day on it. And also, like Jack, I've been like kind of involved. I've not really traded. I've just kind of bought it a while ago and held on to it. So I've got a bit of Bitcoin and a bit of Chainlink, and they're the two that I've had, and they've actually both done pretty well for me. Like Chainlink is probably about 100% up, and then Bitcoin about maybe 20% up. So yeah, they've both done well for me so far. But I just like to find out a bit more about it and what drives it all.
Brilliant. Yeah. Okay. Great. Cover off that. Thanks so much, Connor. Tegan.
Yeah, just interested really. I'm clueless, don't really know much about any of it, so I just thought it'd be really interesting to find out a bit more. Brilliant. Very brief.
Okay, so I assume that you haven't put any money into crypto yet.
No.
Really new to the game.
Yeah, just want to learn.
Okay, cool. Brilliant, thanks ever so much. Laura?
I think a lot's been covered already. Just interested to find out a bit more. I haven't got any invested yet. And interested to know like how easy it is to buy and to get your money back, to sell it.
Yep, can go through that. So real easy actually. Just set up an account on Coinbase. But I'll go through that in a minute, and I'll explain exactly how you do that. Cool. Okay. Great. Yelena?
Yes, I was introduced by my brother Dalibor, who is actually just joined, and then I had a chat with you with regards to this. I have invested about less than £1,000 on Bitcoin and Ethereum, and I'm really surprised how easy it is to trade, and how the crypto gets integrated into the whole system. And it seems to me that the whole sort of economy is turning from a normal sort of banking into peer-to-peer or crypto. So I want to understand why, in a way. I mean, I know a little bit why, but it would be nice to just have a kind of broad brush on what are the forces that lead to that.
Yeah, no, definitely. I mean, the blockchain is being used not just within the cryptocurrency world, but within corporations as well. If you think of companies like BMW and driverless cars and how it interacts with public transport, that is effectively a use of the blockchain. You've got banks now trying to use it, so it's not just these kind of cryptos that use it. It's got real world fundamental uses.
Excellent.
So thanks so much, Yelena. Good to know you've already invested, and we'll cover a bit more about that later on. And Sarah.
Thank you. Sorry to be sort of dipping in and out like this.
It's okay.
I think I've listened to all the questions raised and stuff, and I think are really, really good ones, particularly what you were talking about, Yelena, is that, I'm completely on the sidelines here, nothing invested, really interested to know from, the beginning, from a complete novice. I think, David, when you were at a networking meeting that I was at, when you mentioned this, I thought it was so interesting, it incurs a binary reaction. You had, some people being really dismissive, even rude, skeptical, which I always think is fascinating. And then you have other people, immediately going, I want to find more. And so it's of course, no one knows is if this is sort of becomes mainstream, etc. And therefore it's clearly at the speculative end of the spectrum at this point. But if it is going to become more mainstream, and as Yelena makes a really important point in terms of, more integrated into how we do business, how we transact, then the clever people, the people who at least understand it and then work out how to, utilize it and even, you know, benefit from it. So I'm sort of looking at it from almost like a macro perspective, is how do we understand it? Because, you know, I'm coming from a kind of position of ignorance at this point, and I think everybody needs to understand something in order to have a view, even if that view is a negative one.
Indeed. Yeah, you've got to understand something that you're buying into at the end of the day, don't you? But yeah, you're right. I mean, I think because it's such early days, we are in such early days, everyone's going like, well, it's a scam, you know, or look at all the illegal activity that people do using Bitcoin and stuff like this. And it's funny because back when the internet first came around, guess what the media and press were saying?
The same stuff, isn't it?
Yeah,
and now, you know, the egg is on those places, isn't it? And it's so it's actually just trying to sort of understand that, because, and that will explain why there's so much volatility. But you know, I mean, anyway, over to you. Thanks.
No, that's exactly it, and that is the reason.
Screen off again.
That is the reason, predominantly because of the volatility. You know, at the end of the day, people are kind of following other people like sheep, and if everyone starts selling, guess what everyone else starts doing? They start panic selling, because this new technology isn't really fully understood by a lot of people. I mean, I'm still getting my head around it, and I started, you know, investing in cryptocurrency back in 2017, I think it was. You know, it's just a bit of a minefield out there, but hopefully with today it'll be a little bit more clearer. But yeah, thanks Sarah, thanks for that. Natalie.
Yeah, thank you. So really similar, actually. I've put a bit of money into Coinbase on Bitcoin, but again, don't know enough about it to kind of know what else to do from there, really. So it's kind of understanding what else I can do rather than just kind of put that there and leave it, because I kind of don't want to miss the boat, really.
Brilliant. So it's the next stage on from Coinbase, what to start doing then. Great. Okay, cool. Has anyone heard of a platform called Binance? Is there a few nods, a few shake of the heads? Effectively, if you did want to then start going into, so Coinbase will allow you to buy into, I think, about 40 odd different crypto coins. If you then wanted to start going into pretty much the rest of the market, then you go onto platforms like Binance. So if you want to be too later on, I can show how to basically do that, because Binance won't allow you to exchange fiat money for crypto, i.e. pounds and dollars. But it will then, what you then effectively do is you have to send the Bitcoin or Ethereum that you have from Coinbase to Binance using a particular address. So I can show you exactly how to do that later if you'd like. So that's the next stage on. Yeah, thanks, Natalie. Right, we've had Alex just join. I think he's just left. Dalibor, is that, have I pronounced that right?
Yeah, hello.
Yeah.
It's Dalibor.
Yeah.
Nice to meet you guys. I am Yelena's brother. I've been investing in crypto 1.5 years. And for the new people, I can tell only one thing. The Bitcoin is now, they can look like a Facebook of money in the future. So the crypto currency is a new way of payment in the future. And I think everybody should invest. They will start to invest with small amount of money, because new things are coming. I've been involved in Ethereum, NFT, DeFi, the new token that are coming now, the smart contracts, and there are a lot of things that are coming. So for the new people, it's nice to learn everything step by step, because I think that is the future of money. And I can tell why the Bitcoin is so volatile, and it's gained to 60,000 USD, because a lot of investment bonds and investment companies like Michael Saylor and Elon Musk and other companies in America invest billions of dollars in Bitcoin. So because of that, the price is going up. So if you put 1,000 or 100 pounds, you will the yield from 1 year, it will be, I think, at least 100%. So the money that give interest, the bank, is nearly 2%. It's very little. So
yeah,
it's very interesting to new people to understand this technology and everything that is coming with the new age of payment. So yeah,
no, definitely, it's a no-brainer when you've got such low interest rates. You've got such high returns in this. Yeah, but you know, you're right. I mean, the adoption in Bitcoin, especially just over the last few months, has been profound. I mean, you've now got the mayor of Miami has started accepting Bitcoin payments for people, and they've actually started accepting people to do their tax returns in Bitcoin. Funnily enough, you mentioned Elon Musk there. You can now buy a Tesla, I believe, with Bitcoin. Various other different financial institutions like MasterCard are now starting to accept it. So you can now start to see, which was very different back in 2017 when I first started. It very much was all speculation.
They use Bitcoin. They use Bitcoin for transaction of laundering money, but now they're accepted. They're accepted it in many countries. You can buy property also in Dubai with Bitcoin. This connection with PayPal and other companies that will use the crypto wallets, it's very very interesting, and the future for Bitcoin. I said the Bitcoin is a digital gold. You must see Bitcoin as a digital gold because it's better than digital gold, because you can take with you in the pocket, in the ledger. If you have one Bitcoin, you can take through the borders. You can take with you. But if you invest in gold, you cannot take the bars between the borders and go outside. So the Bitcoin is much more valuable asset that is now good to invest in Bitcoin, and you should see on Bitcoin on the long term. Maybe if you invest now, you should think about 1 year investment, or because it is volatile, or if you want to make money, you should trade Bitcoin, but you need to trade on Binance with leverage. You must have a lot of experience about that, because you can lose the money very easy. So that's
Brilliant. Thanks very much.
Okay.
Great.
Thank you guys.
Brilliant. Great. Okay. So thanks everyone. So I think a good starting point, we really kind of go back to basics with this, understand what crypto actually is. Effectively, what you're doing is you're sending information from one computer to another using cryptography. So it's a method of, which is actually a Greek word for hidden secret. So effectively what it is, it's a study of, and I quote, study of secure communication techniques that allow only the sender and the intended recipient of a message to view its contents. Okay, so what you're effectively doing is you're encrypting data using a secret key. That's what's meant by cryptography. So, or i.e. a password. So when I send information from my computer to Jack's, for example, that message is encoded, and then you use that key or password on the other machine to then decrypt that message. So it's completely safe and secure. Okay, so that's what's meant by the actual term crypto. So just bear that in mind. Okay. So then what we're then going on is trying to understand what the blockchain is. Quick hands up. Who has absolutely no idea what I mean when I say blockchain? It's a quick show of hands. A few people, some people, vague understanding. Okay.
Sorry, David. I would really appreciate you just doing definitions of Bitcoin, crypto, the whole lot. Assume, and I don't want to take the level down, but it would be very helpful for me as a novice to just have each term explained in a very simply.
Yeah, no, yeah. So I'll go into what Bitcoin does and what Ethereum does in a wee second.
But even down to blockchain, because again, it means you'll carry us with you.
Yeah, no, definitely. So I'll just explain what the blockchain is now, and then I'll go into the three fundamental cryptos. So Bitcoin, Ethereum, and what's the next big one? I'll do Binance chain as well. So here's a question. Why do we value the money in our pocket? Throw some answers out.
Because it's earned.
Because it's earned, yeah.
Because we can touch it as well.
You can touch it. Yeah. Anyone else? Well, fundamentally, we value the money in our pocket because
it's a recognised value, isn't it?
Mm-hmm.
So that you recognise the value of £1, but you recognise the value of a Mexican currency. You value different currencies, different notes, coins in a different way. But I also think that we value money. I mean, because we're going to a transactional environment where you just transfer. I mean, how much money do you carry around in your wallet anymore? Not very much. So is actually valuing something. It is the thing that you are transferring, but you are putting an increased value on, whereas historically you would have put the value on the physical thing.
Yep. No, definitely. Yeah. So I guess to summarize exactly what you just said, why do we value the money in our pocket? It's because other people do. It's only got value if we both perceive that value. Does that make sense? So whether or not it be gold, Bank of England notes or matchsticks, if I was to send Tegan 1,000 matchsticks and she sees value in that, then those matchsticks might actually be worth something. It can also come down to one other thing, fundamentally, is trust. Do we have trust in the currency that we're using? Yeah. Now, if we were to take that into the digital money realm, for years now, people have always tried to create digital currencies or digital money. This isn't something particularly new as such. The difficulty is, if I was to go out and start creating lots of David pounds, yeah, and I am the owner of that network, there is nothing to stop me from creating millions of David pounds. Realistically, is there? Neither is there anything for me to stop going and nicking my David pounds from Jack's account. Okay, so as a kind of solution to that problem, Bitcoin was created. Yeah, and what Bitcoin does is it uses a special type of database called the blockchain. All right, so what is the blockchain? A blockchain is essentially a huge book, or what's otherwise known as a ledger. Okay, so every time I send Bitcoin, yeah, to another machine, that transaction is copied into that book or ledger. Making sense so far? So as I explained just a moment ago, before, whenever you're sending electronic money from one bank to another, it goes on a database, and effectively that bank will have control of that database. So therefore what a blockchain does is it gets rid of that bank and therefore becomes decentralized. So no one is effectively in charge of that database. It's run by the people that use it. Yeah. And as I explained earlier, there's some very clever mathematics behind that to make sure that that information isn't faked, hacked, or indeed double spent. Yeah. So when people hold on to it, they can therefore trust that that particular bit of crypto has value, because we are trusting that that money is being safely sent to Jack, and that money isn't going to be or hacked or duplicated in any way. Does that make sense so far? Yeah, okay. I'm now just going to quickly share my screen. Bear with me, and I'm just going to Make some notes on my pad here. So give me 2 seconds. Hopefully this works. Right, here we go. So with regards to the blockchain, can everyone see that okay? With regards to the blockchain, what we are effectively doing is this block, which is roughly speaking about 1 megabyte of data. That's a bit beat. So that's equivalent to, you know, an image, a photo, will contain all the different transactions that are occurring. So every time I send Bitcoin to Jack, that will then go into that block. So I've scribbled that appallingly, 1 megabyte there. So there's only so much data that that block can store. So then once that's completed, another block is then created. Hence the expression blockchain. Yeah, makes sense? Cool. So who authenticates these blocks? Well, this is done by what's called the miners. So in Bitcoin, there's 2 terms. There's called proof of stake and proof of work. No, don't really need to know what those are at the moment. I can go into those if you really want to be later on. But effectively what you're doing in proof of stake is every machine is authenticating those different transactions. Okay. Now, obviously, the more information there is, the more computing power you need. But what's also going on, and I'll stop in a second, what's also going on with these computers is you effectively, to create a new Bitcoin, for example, what these computers are doing is effectively solving an algorithm. And the more Bitcoins there are in circulation, the harder that algorithm is to solve. So therefore, the more computing power you need. So some of you may have seen in the news that you have these gigantic computing farms now, worth the kind of electricity output now of a kind of a small country even, trying to churn away and solve these algorithms and authenticating all these different blocks on the blockchain. Does that make sense to everyone? Any questions?
Does that mean that the mining hasn't finished, so that the market can continue to grow?
Well, with Bitcoin, funnily enough, there's only a certain amount that can ever be mined. So that's 21 million. I don't know what they're at the moment. I think a rough figure just popped into my head, 17 million. Maybe I've seen that somewhere recently. But with Bitcoin, because there's so much power that's needed, what they've then gone on to create is something called proof of work. So instead of using computer power to basically authenticate those transactions, what they're now doing is saying, right, well, you're going to stake a certain amount of crypto in a pool, and for that you'll get rewarded. Because at the end of the day, you need people to authenticate every transaction because you don't have the bank or governing body doing it. So you need to reward people like you and I for actually doing that work. Right. So what they've now gone on to is a system whereby if I was to lock up a load of Ethereum 2.0 is now going on to this method. So Ethereum have basically said, right, you need to lock away 32 Ethereum. And because of that, you are then authenticating the transactions, and we are going to reward you with more Ethereum if you lock that money away. Does that kind of make sense? So you've got proof of stake, proof of work going on with different cryptocurrencies.
Yeah, I think so.
I don't really want to go into any more detail than that at this early stage, but that's effectively what you've got going on.
Okay.
Again, just to repeat, You don't have any bank or central authority figure authenticating these transactions, so you need other people doing it, members of the public, and therefore you need to reward those people from doing that part of the job.
So David, sorry.
Yes.
I'm really sorry to ask very simple questions.
No, it's fine.
To make an analogy, is it almost like, well, we don't have anywhere to store that stuff, so if I store it in my car, that validates it, it proves it exists, yes. It acknowledges it actually is in existence. And by the way, to thank you for storing it in your car, you'll get a bit of extra thrown in. But remember, it might not end up being any good, and therefore, when you hand it back, you might hand back less than we put in your car in the first place. Is that kind of? Yeah. So the value will always derive from the amount of people that are using it, right? That's the simple economics. So yes, that analogy is right. So when you're storing that money in your car, or that data in your car, yeah. What they will do, so what Bitcoin, for example, does is it rewards you by not only paying you in more Bitcoin, and that's the reason why you've got these massive mining pools, because once you've solved that algorithm, it can be very profitable because you're given free Bitcoin, and the value of the Bitcoin at the moment is worth over £40,000, whatever it is. What's the value at the moment? $56,000. If you were just getting a few Bitcoin in that's a great return. But what you're also getting on top of that is the transaction fees. So whenever you send things around, so for example, Ethereum is actually very expensive to use, because one thing I didn't just explain there, in every block, if you've got thousands and millions of people wanting to basically transact, then you're going to have to wait the queue, aren't you? For that particular transaction to then go into that block. So now what you've started getting is a situation where you can actually pay more money to skip the queue. So all those transaction fees then also get paid to the people that are basically putting each transaction to the ledger. So it's very, very profitable for the people that do that. But there's obviously, you've got to do something for it. And at the moment, as I say, it's actually staking or locking away the particular cryptocurrency to get rewarded. But yeah, your analogy does stand, Sarah. Thank you. Sorry to make it so basic. No, it's fine. No, it's good to make it simple. That's great. Any other kind of, does that make sense to people? Please say if it doesn't. I'll try and explain it in a different way. Yeah, cool. I mean, as explained earlier as well, the blockchain has many uses. I mentioned BMW. It's being used with airline companies. It's being used with telecom companies. For example, Deutsche Telekom are now using it. So what they're effectively using is smart contracts to negotiate tariffs with other network providers. Effectively, it's just helping to build this whole ecosystem around what's called the Internet of Things. So it's not just used for currency. There's other real-world uses for this particular type of technology. So if that's made sense to everyone, shall I now go on to perhaps what the top 10 currencies are, or would it be more helpful to kind of give an explanation of how to actually go about using different platforms? What would be most beneficial for everyone?
I would like to know about the currencies, only because I've used Coinbase in it. I haven't used anything else, but that in itself is quite straightforward, I think. Yep.
Okay. Right. So, why don't I go through the top 10 very quickly, and then what time are we on? We've got 20 minutes left, and then I'll quickly give a demonstration of how to use Coinbase for those that haven't used it before. So Bitcoin, as has already been described, is effectively a form of digital gold. It's a store of value. Yeah. So you're keeping your money in a digital wallet that you can download, or keeping it on a platform. And effectively, you can then transact and send that Bitcoin to different devices. And as I've already explained, every time you send that Bitcoin to someone else, that information is then stored in a public ledger. Yeah, so Bitcoin is actually very simple to understand. It's just a store of value. But the good thing about Bitcoin, the reason why it's so popular, is because all other cryptocurrencies are effectively pegged off the back of of Bitcoin. So think of it in terms of like real world markets and the dollar. Yeah, most economies are pegged off the dollar. So the better that Bitcoin does, more likely than not, if Bitcoin goes up, other cryptocurrencies will follow. Sorry. There is sometimes a negative reverse correlation between Bitcoin and other prices, but that's actually quite rare to see. And what actually you can see is if Bitcoin goes up too much, it can almost take the air out of the other coins. And some of you may have heard the phrase altcoins or alternative coins, effectively every other coin out there. You might hear things like an alt bull run. So a bull run is markets going up. If Bitcoin is going up too much, then that won't happen because, well, where are you going to put your money? You're going to put your money into some smaller cryptocurrency, or you're going to put it into Bitcoin that's going up, 20, 30, 40 odd percent. So that's the reason why it is the value that it is today. And also because there's only a certain amount in circulation, as I said, 21 million earlier. So supply and demand forces come into play there as well. Okay, makes sense with Bitcoin? So Ethereum, so if you think of Bitcoin is crypto version 1, yeah? Ethereum is going on to crypto 2.0 almost. So what Ethereum is, it's yes, it's used for peer-to-peer method of moving money around. But what it effectively is, it's a platform for smart contracts, and it's a platform for you to develop other applications off it. So you've got the Bitcoin blockchain here. And then separate to that is you've got the Ethereum blockchain, all with different transactions going in. But the Ethereum blockchain allows you to then create other tokens and other technologies from that blockchain. Make sense? So you've got now, for example, games being added onto that blockchain. But more importantly, you've actually got finance apps going onto it, or what's known in the industry called DeFi, which is effectively just using finance using the blockchain. So now you can actually go and apply for mortgages and things like that, get loans. Yeah. So all the use things like trading and derivatives, those applications are all being created off the Ethereum blockchain. Yeah, so that's the reason why that has now become the second most commonly adopted crypto out there, is because it enables other people to create apps off it. Yeah, makes sense? So that's kind of in a nutshell. I don't want to go into too much detail. Ethereum, and then you've got other copies of Ethereum. So some of you may have heard of Tron, Cardano, EOS, or Algorand. They are effectively copies of Ethereum, because what's happened now is, because everyone is using Ethereum, it's actually become very expensive to use it as an app developer. Does that make sense? So now people are starting to move on to these different ecosystems. Yeah. Any questions on any of that? Is that going?
Only as much as, is Ethereum likely to, in terms of its functionality, outstrip Bitcoin if it hasn't already? If Bitcoin ends up being gold, what's the real world translation to Ethereum if it's more useful than anything else, if that's where its value comes from?
Yeah, there are people that are saying over the next few years Ethereum could overtake Bitcoin. Bitcoin in its very nature is actually very outdated. The technology is very outdated. I mean, it was created back in 2007 or 8, I think it was. The white paper first came out. If anyone's actually interested in reading that, it's actually only 10 pages long, and you can just Google Bitcoin white paper. It's actually not that complex, and it does give you a very good understanding in terms of how the technology actually works. So I'd definitely recommend reading that. But because, as I say, because everyone's using it, it's become very slow. So if I was to send money to you, Jack, it might take upwards of about 5 to 6 hours. And it's very expensive as well. And that's the reason for the next most commonly adopted one, which is Litecoin. Litecoin is effectively Bitcoin as a mode of transferring value, but it's a lot quicker because a lot of people are using it, and the technology has been upgraded effectively. Does that answer your question?
Yeah, I think so.
Yep.
Yeah, thanks.
Cool. So the next one down is something called Binance Coin or Binance Chain, developed from the Binance platform, funnily enough. And effectively, this is a very similar thing. It's enabling decentralized trading, but it's also enabling smart contracts. So you've now been able to transact using that particular blockchain, various different financial instruments using that one. And another one which would be really good to look at if you did want to invest. This has been one of the hottest cryptos of last year, is one called Polkadot. So effectively, what Polkadot does is, because you've got all these different blockchains doing different things, what Polkadot does is effectively allows a connection between those different blockchains. So it's almost like a super highway between Bitcoin, Ethereum, EOS, Tron, and it allows all those to kind of connect up. Yeah, so it's one just massive ecosystem. So that's quite a good one to go into. Another big one is something called Ripple. If anyone's heard of Ripple before, with the token XRP, it was in the news recently because of some SEC lawsuit. Can forget that for now. But effectively what Ripple was then trying to do was speed up the transfer of money between people, but more specifically between banks. So real life technology there. And that's effectively what it's allowing you to do, is to send private money very quickly between two people. And then you've also got things like Cardano, again, similar to Ethereum and EOS. It's essentially the second generation of crypto using, effectively, it's just a platform to develop other applications from. And really, those are the main ones. If you wanted to have a look at some others, I'm just going to share my screen. A couple of things I wanted to quickly go through with you would be go onto a website called CoinGecko, GECKO. I'll share my screen quickly. And effectively what this just does, it lists the top 10 coins. Can everyone see my screen? Okay, yeah, can you see the list of different tokens there? So you can see here, there's obviously hundreds. I mean, that's 100, and there's 66 pages. I only know a few of them, but what it does allow you to do is quickly see how they've been performing. So if we were to go in what's been performing the last 24 hours, for example, yeah, a lot of those, a few of those, I know what they are, but you can quickly see the kind of returns given a particular token. So this is quite a good thing to look at if you wanted to have a play around with it. Let's go into Harmony, for example. If you wanted to kind of an explanation of what this is, let's give it 2 seconds while the internet loads. Scroll down to the bottom. It will show you what platforms this particular token is on. But it usually gives you a description here. This description isn't very good, unless it's not loaded up yet. Doesn't load up. I don't know why my internet's going so slowly. That one's not loaded up. Okay, but you can also see a quick graph as well to see how this particular one's been performing very well by the looks of it. And also kind of just give a link to the website as well. That's some strong performance there. So if you just want to play around with that, very quickly, because I know we've got 10 minutes left, if you did want to get started with this, get yourself onto Coinbase. Setting up an account only takes about 5-10 minutes, I'd say. But effectively, very easily, you go on to, once you created your account, you'll have a buy and sell button at the top right-hand corner. Click on that. Oh, why isn't this working? There we go. Oh, sorry, guys. Let's go back in. Oh, sorry about this. Right, so once we're back on, click on buy and sell. And it should, I don't know why my computer's suddenly starting to go so slowly. Oh, dear. Right. Okay, right, so you add a payment method, simply connect that to your bank account and away you go. Once you've decided that you want to sell and actually move the money from the token into your Coinbase, effectively what you need to do is you need to convert the Bitcoin that you have or the Ethereum that you have into your chosen fiat currency. So Coinbase will allow you to convert that into pounds, dollars, euros, whatever you want, and then you simply link that to your bank account. Make sense? And then on here, you'll have a list of all the different tokens that you go into. I think there's about 40 on Coinbase. But you can't really go too wrong with just selecting the main ones on here. These are all the highly adopted tokens out there. So this is a really good place to start. Now, I explained earlier, when you then go on to move on to different platforms, effectively you send the particular token to another wallet. So every wallet, if I was to go onto my Binance account, for example, hopefully this one does actually work. So for example, if I was to go on to, I don't really want to show my wallet here. Let's go on to Spot. Don't want to show my wallet, but so if you send here, so you see here, mobile, email, or address. When you're on Binance, let's click on here. You'll be given kind of a long code of about 20 different numbers and digits. You effectively just put that into this box there, and then press continue, and then it will send. What you'll normally then need to do is set up yourself with a Google Authenticator app. Some of you might already have that on your phone. You'll just ask for kind of a six-digit number, and then away you go. And depending on the particular token, as I say, that might take anywhere in the region of a few minutes if you're using things called Litecoin, or Bitcoin maybe take 5 or 6 hours, depending on the amount of transactions there are going at that particular time. Does that make sense? It's pretty straightforward, this stuff. Does that make sense to everyone? Has any got kind of any questions on Coinbase? Say now forever or forever hold your peace.
If you want to buy coins that aren't on Coinbase, like at the minute you can't buy Ripple on there because of that lawsuit thing.
Yeah.
Is there anywhere else that's safe, or where you can just do it for pounds? So what I like about Coinbase, I can just take money out of my bank account and just buy them direct. But do you have to really do it through Binance if you want to do those types of coins?
You do to transact from fiat currency, i.e. pounds, to a token or crypto. You do generally need to use Coinbase. I actually spent a bit of time not so long ago trying to find if there's any other platforms, because as good as Coinbase is, and I know this from recent experience, if you do something wrong, there is no number to call. There's no you can email them, and their head office over in San Francisco might take forever and a day to get back to you, but their customer service is absolutely appalling. And from learning from my mistakes, always make sure that you are sending one particular token to another. So don't ever send Ethereum to a Bitcoin address, because you will lose it. It won't be lost forever, but to get that back will be very difficult, and you'll have to go through a lot of rigor and stress messaging Coinbase, and the chance of then getting back to you is slim. I mean, for us, it took a matter of months because of quite a simple mistake. So that's one thing that always double check, is you're sending one particular cryptocurrency to another in the same wallet. So why do I say this? Well, I looked at other platforms because of that poor customer service. There doesn't really seem to be many other out there that you can actually convert your fiat currency to a token. So this is fundamentally your starting point. Having said that, there are now new cards that are coming out. So for example, I've got a card recently called Plutos, Plutos. And effectively what that allows me to do is go out and actually transact and pay with my pounds. And what that effectively is a platform for me to convert Ethereum into pound coins. So I go out and use it as a normal debit card. And here it is. If anyone can see that. Mm-hmm. So it's normal Visa debit card, but that allows me to, but that unfortunately took me about 6 months to get, and you have to go in a queue. Binance have a card. I'm in the queue for that. And funny enough, Coinbase have a card as well. So for anyone that actually is interested in this, just go in, sign up, and try and get yourself one of these. I think it's really useful. So David,
do you think it's become like so mainstream that this would be a bit like we do all have our debit cards and our Visa cards and stuff and things, that actually you're going to eventually be the weirdo that doesn't carry a card like this?
Quite possibly.
Not weirdo, but but
quite possibly.
Yeah, it's almost like, are you saying don't just get one, because then it means otherwise you are, it's like you're in the Wimbledon queue with 10 gazillion people ahead of you. It's better just to have got yourself in with a little bit of a stake in there. Yeah,
no, definitely get yourself ahead of the queue. I mean, this the mass adoption hasn't really started yet for the general public, I don't think. People aren't accepting Bitcoins yet as a mode to pay for generic stuff. You can't go down to Sainsbury's and pay with your shopping with Bitcoin yet. You might be able to in a few years' time. But that's what's so good about these cards, is you, in a quick click of a button, you convert your Ethereum into your pounds very quickly, transaction done, and away you go.
It's equivalent. You've just turned euros into sterling, and therefore you can use it. It's kind of, isn't that sort of, again, the commonplace analogy?
Yeah, exactly. No, definitely. And what's really good about this one, so I don't want to be selling this particular one, this is just the only one I've got, but they actually reward me. So every time I spend money, they reward me in what's called Plu coins. Now, those Plu coins might be worth nothing, but at least they're giving me that back. For every transaction, they're giving me 3% back. So I can see on my app, oh, brilliant, I've made a few pence per transaction. And if that currency does well, then that goes up So I just think that's quite cool, but you know, I'm sad. So there we go.
But I suppose again, it's because it's at an earlier stage, therefore they want adopters.
Exactly.
Because they want, the more people get into their club, the more the value goes up, and then they can start to take those benefits away if they want to.
Yeah, no, definitely. Yeah.
Is that like a crypto revolut?
Yeah, yeah. No, exactly. It's like a Monzo.
Yeah. Okay.
Exactly like a Monzo card. It's just you know, it's you top it up and away you go. Yeah, so that's really. I'm just conscious of time. I can continue talking about this stuff until I'm, you know, blue in the face. But I did say we only got an hour. Has anyone else kind of got any burning questions? There's quite a bit that I still wanted to cover off. Maybe I should do a part 2 for this, because I can go more into, you know, the actual trading mechanics of crypto and ones you might want to start buying and selling, what to look out for. This is just, you know, really going back to basics almost and getting the understanding there before going into any of that stuff. But were there any other kind of burning questions?
Is there regulation? Is it, you know, or is this completely eyes shut as opposed to eyes wide open?
Certainly in the UK, there's no regulation at the moment.
But do you think, I mean, will the FCA look to take it on board, do you think?
Quite possibly. I don't know how you can regulate something like this, because the whole point of crypto is that it's decentralized.
Yeah.
So of course, when you,
it transcends borders, doesn't it?
Yeah, exactly.
It does, you know, it doesn't respect, you know, any of the usual mechanisms. And then how does it fit with you? This is not a loaded question, I promise you, but you know, you're a SJP, FCA regulated financial advisor. How does it fit? How does it fit with you? I mean, in terms of, are you empowered to talk? Are you talking as David Gregory here? Or
yeah, David Gregory. I should have said this at the beginning. This is not financial advice. Please don't. This is financial advice.
That wasn't a trip you up question, or
no. I should have.
Or whatever it was, but I think it's really interesting because it's rather like, you know, you're talking about something that is really seismic shifting potentially, and you know, where we settle may not be this, but it may be whatever, you know, the next generation or whatever. But it's but it does seem slightly as if the you know, that the financial community needs to be talking about it. I suppose it's because because it's not regulated, you can't necessarily promote it or put your clients into it or whatever. But you know, but then put yourself in the shoe of your client. You know, the client says, "But hang on, are you doing me justice because you won't talk to me about a big elephant that's out there?"
Yeah, indeed. I mean, so thanks very much for that, because you reminded me. I should have said at the beginning that, you know, this obviously isn't financial advice, and I'm not coming from this from a financial advice perspective. This is just me guiding you. If you want to invest, this is how to do it, very strictly. So a lot of people, I should have said that at the beginning. Just a little kind of word at the bottom. A lot of people did go to SJP back in 2017 and go, well, why haven't you opened a fund? And they turned around and said, we're never looking at that. So that's their stance on it. I think there aren't any kind of crypto funds out there as such to actually give advice on. It'd be very difficult for me to, and I would never actually want to put advice onto this, because it is so volatile and you can lose everything quite easily. I mean, I learned very much the hard way back in 2017. Lost pretty much everything in the space of maybe a few weeks, and it wasn't pretty. I learned a lot from it, so I would never advise people doing it. But certainly, as you say, there's a massive elephant in the room here. There is a seismic shift, and certainly, if people want to talk about it,
you know, it's rather like what you're doing today. It's educational, if nothing else.
Yeah, exactly. That's all.
So as long as there is a whopping great, you know, you're doing this at your own risk, but then, and this represents entirely the other end of a spectrum, whatever. But actually, people need to be educated on something, because otherwise, if it does become mainstream, which it looks as if from what you say it will, and if it's already, you know, if you can go and buy a BMW using it, why shouldn't you be educated on it?
Yeah, exactly. I mean, Elon Musk invested, what was it, a couple of billion or something, or I can't remember the exact figure in my head, but a lot of money at the beginning of the year. You know, he is now become Mr. Bitcoin. You know, and if you got the world's richest man putting that much money into this stuff, you know, this isn't child's play anymore.
Well, isn't it that really what people like that are doing is saying they are investing in a trend or a like an abstract almost, you know, that we think this is where this will go. The individual platform or currency, you know, some of them will not sort of become mainstream, but actually as a concept, this is where it's going. Isn't that what that sort of endorsement is? And of course, he stands to make a lot of money or lose money along the way. But
yeah,
you know, but by virtue of the fact he does it, means he probably does make money, because then he becomes a trend starter.
Yeah, exactly. I mean, the genie, as they say, is now out of the bottle. There's no putting it back. I guess the difficulty with this is because it's so volatile. It's very difficult to actually see people using this as a mode of transaction between actually buying stuff. Because what you don't want to be doing is going down to the local supermarket and the loaf of bread has gone up by 100, 200% because that's what Bitcoin has done. So there is a lot of ironing out to be done. But, you know, kind of go back to the beginnings of the internet. How many years did that take to iron out all the issues that had?
Well, I suppose also it is massively inflationary and deflationary at the same time. But so too was money, physical currency, when that first came into existence, because there would be a limited supply of it.
Well, that's another very good reason why people are adopting it. If you look at countries like Venezuela that have hyperinflation, a lot of people in those kind of countries are now trying to adopt Bitcoin. And what you then find is a lot of people actually creating mining pools, like I mentioned at the beginning of the workshop. And what the government there are now doing is actually looking at people's power outages and going, right, are they likely to be creating these mining pools in their houses and going in and stopping it? And you've had countries like India that have banned Bitcoin because a lot of people are scared of this currency taking over their local currency. So there's a lot of, that's another very useful case is protecting against hyperinflation, but also if you think of people that don't have access to bank accounts. You know, a major part of the world's population, people in Africa, for example, don't have a bank account. I think someone mentioned PayPal earlier. PayPal is only useful if they accept you as a client. If you're a 10-year-old Nigerian kid, you're not going to be accepted as a client using PayPal or Stripe. You are, as long as you have access to the internet or a phone, you can start using Bitcoin and other cryptos. I'm just using Bitcoin because it's the main one. So there's lots of real world cases and why fundamentally a lot of people are taking this up. You know, 3/4 of the world population, for example, probably don't have a bank account or don't have access to one, you know. So
yes, a friend of mine who is Turkish, she's told me that in Turkey, because they have inflation, keep on using Cardano, and Cardano is being very, it's like a second currency.
Yeah, exactly. Yeah.
Interesting.
So I think it's the rate of adoption is only going to increase. But as I said, there is a lot of ironing out of kind of the technology that needs to be sorted. I mentioned earlier, Ethereum 2.0 is coming out at some point this year. That will certainly iron out a lot of the niggles that blockchain has, because it has become very slow. Cardano is a very good one, like you just mentioned. You know, and there will always be other ones coming up.
So
that's
one
just
quick question. So is the are all these tokens and currencies, cryptocurrencies, actually limited in terms of supply, similarly to Bitcoin?
No, it's only Bitcoin. So for example, when Ripple was created, they created an enormous supply number off the top of my head. I don't know exactly, but let's say 21 million for Bitcoin, as like let's say argument's sake, $1 billion for Ripple. And that's one of the main reasons for the SEC lawsuit, is because the owner of Ripple took about 70% or 80% of those for the staff members. So they kept the profits themselves. And that's the main reason why it's been making kind of headline news. But so at the beginning, the owner, as it were, that the creator will dictate the actual circulating supply, or if indeed there is any circulating supply. of that particular token.
But at the moment, there is no limit on Ethereum, for example, or is there?
I believe there is. I don't know the number off the top of my head. And I also don't know what because as I say, you've got Ethereum 1 and you've got Ethereum 2.0, which is effectively a completely separate beast altogether. I don't know what that technology is going to be, what the rules are around that yet. So I can't say for any certainty, but I know with original Ethereum, there was a limited supply. But again, that kind of comes back to, again, what I mentioned earlier is the difference between proof of stake and proof of work. Yeah, proof of work, obviously you're staking money, you're locking it away. So therefore, do you need a circulating supply? Whereas proof of stake, you need obviously massive computers to be able to reward those particular tokens. So that does play into the kind of the adoption of that particular technology and the usefulnesses of it, because it's far more eco-friendly with the proof of work model, and you can and the scalability and everything else. If does that make sense? Kind of. Yeah. Cool. Any other questions before I kind of shut off? If you want me to do another one to talk about more the kind of the trading aspect of this, happy to do that as well.
I think another one would be great, because I have to go, but I'd love to talk about like tax and profit as well, and kind of get an understanding of like back end of it and how it works and what those implications are.
Well, I'll tell you what, I'll circulate an email after this with a recording. Why don't everyone here just send me a list of their questions that they might want covering off in the next one, and then maybe next month I'll do another session.
Cool.
Does that work for everyone?
Yeah.
So do that, and I'll try and compile another hour session based on that, rather than just kind of shooting from the hip, which is what today's been like.
That's very good. Thank you very much.
Pleasure. All right, guys. Well, thanks ever so much. Yeah, thanks for coming along. And so I think maybe I'll do another one next month, but I'll let you know the date.
Cool.
Thank you.
Thanks,
Brilliant. Cheers, everyone.
Thanks, David. Bye.
Thank you. Bye.
Cheers. Thanks, David.
Bye.
Bye.